All right, so we had one of the quietest days. In fact, I saw something about this being the smallest trading range that we've had in like years. So I mean, August typically is a quiet period anyway, but this was abnormally quiet. The volume was low, the range, you'll see that. The range was low. There were a few outlying moves, so we'll talk about that. That three-headed monster I bring up sometimes, it reared its head today. Didn't have as big of an impact as it has in the past, but we'll take a look at those intermarket relationships. Those are really big ones that impact risk appetite and investor sentiment. So we'll take a look at that. There were some interesting patterns in the market forecast as well as in other indicators that kind of give us an idea of what to expect going into the rest of this week. So I'll talk about that, what my expectations are based off of those patterns. We'll take a look at international markets. It was kind of a surprising, one of the bigger losers on an international scale was our biggest winner today. So, we'll talk about what that means and that space. And then from a sector rotation standpoint, it was a good one. And I'll show you why. And then our trade idea is a stock that's kind of, it's been on, try to break out, get going to the upside. It's been on its own intermediate decline. It looks like a lot of stocks right now, and we'll talk about, how to trade that as that's probably going to be our most popular trade idea or trade pattern that we have right now. So I'll give you an example of what I'm talking about. So let's go ahead and get started. Today is Monday, August 18th, 2025. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, let's start off taking a look at the S&P 500 with the market forecast indicator. You can see we had our second straight down day today, but it was very marginally down. I can't even really quantify that. It's like 0.1 of a percentage point, 0.65, which isn't even not even barely more than half a point on the S&P, which is 6,450 points. So a very small range, very tight range, 17-point day range was all we had. The news is dominated by what was going on in the White House today. And so there wasn't very much market movement coming out of August expiration. The intermediate line, there was some stocks, we'll talk about that, but including our trade idea that we did on Friday. So you can still watch that Friday video for free. But the trade idea that we did on First Solar continue to do well today. So yeah, we do a trade idea every day, right? And in every video, and our foundation members who watch the full video can see at the end of this one. And so that did okay, but most everything else was pretty flat on the day. As a result, the intermediate line is still strongly bullish above the 90th percentile. Market sentiment's also still strongly bullish above the 80th percentile. The momentum line came out of the lower reversal zone, crossed above the near term, but the near term line is still in bearish territory. Now, it did not drop to oversold levels, but it did drop. It's down, at its lowest level since back here on the 16th of July, and then that kind of prompted that near term decline. See, the near term line was also pretty oversold the day before. And then on the next day, the momentum line had bounced back up out of oversold levels into bearish territory, while still in bearish territory, but it crossed above the near-term line. The near-term line had dropped, so it's very similar pattern. Just not as big of a cross on the momentum line, but very similar in that regard. And it was a little bit bigger of a range back then, 60-point range there, and of course, like I said, only 17 points today. But still, well above them, more than 1.5%, almost 1.75 of a percentage point above the moving average. So everything's still pretty strongly bullish from that perspective. And setting up for a bounce, right? A bounce going into the rest of the week. The near-term line the NASDAQ 100 looks very similar. Strong intermediate posture, strong long-term trend with that market sentiment line, and those two lines, how they're positioned in the upper reversal zone. The near-term line down into bearish territory, but not strongly oversold again. The last time we saw the near-term line this oversold was right before June expiration. You can see the big jump it had after that. So just because it's this oversold, doesn't necessarily mean that we're in trouble. We can bounce off of this and bounce up to the upper reversal zone, depending upon, again, how big of a bounce we get on that momentum line, right? So at some point in time, we'd prefer the momentum line to be up here at overbought levels when the near-term line crosses 40. And we'll see if that ends up being the case. That obviously can happen, and that's the most bullish short-term pattern that we can get. If I take a look at the Dow Jones Industrial Average, Again, you can see the intermediate line has crossed market sentiment. It's in the upper reversal zone. It's strongly bullish. Oversold momentum line, near-term line down, out of bullish territory. So it's, you got a bullish intermediate confirmation signal with the Dow Jones, only down 0.08 of a point. But that's a buy the dip signal. The near-term line's not down far, that far. So it might be one of those situations again where the momentum line bounces out of the reversal zone while the near-term line keeps dropping into bearish territory, like we saw with the S&P and the NASDAQ, and maybe there's a bullish crossover there. But so don't be surprised if we don't bounce immediately tomorrow, even though like the S&P and the NASDAQ are both showing pretty decent bullish buy the dip type signals as well. Finally, your Russell 2000 was actually up today 0.33%. Its intermediate line, like the Dow, crossing market sentiment, up in the reversal zone. The near-term line did drop in the bearish territory. The momentum line did bounce out. So this is the kind of pattern we talked about maybe the Dow will get tomorrow. The near-term line came down further, crossing the bearish levels. Momentum line bounced out. Didn't get that crossover like we saw in the S&P and the NASDAQ. But still, that's... again, at some point in time, the NASDAQ, the near-term line will bounce out of bearish territory, and we'd like the momentum line to be as high as possible when that happens. And it's set up for that on the S&P and the NASDAQ and the Russell. It's all set up for that type of pattern to occur over the next couple of days. So there's an opportunity for a short-term bounce, and then we'll gauge how bullish it is in the next couple of days so that we can kind of gauge our expectations going into the end of the week and into next week. All right, well, that's the market outlook preview video. That cuts us off there. The rest of the video, all of our Market Scholar subscribers can watch, about half an hour in length. You only have to be a foundation member to watch these videos. It's $29 a month or $2.99 for the year. You get 2 months for free with that. In addition to that, you get all the market outlook videos on a day-to-day basis. You get the trade ideas. Every single market outlook video has a trade idea, an example trade idea. We also get access to the market outlook live stream videos that we do at 3:30 Eastern time, where we manage all those trades and talk about when we get out of them, which is probably more important than getting into them. And then even more important than that, you get access to our market outlook live trade tracker, where we track the results of all those trades over the course of the year. So you can compare that to the value that you're getting for the cost of access to those videos. So it kind of gives you an idea. Like I said, the foundation members get access. All of our subscribers get access to that, but starting in our foundation tier, the link to that is down in the description below or as the pinned comment as well. Thank you again for watching. Subscribe to our YouTube channel. Hit that like button. Comment on the video. Join us at MarketScholars.com to be able to see the full blog post. You can do that for free. And then follow me on Twitter, Facebook, LinkedIn, all the social media channels there, and like our stuff there. We appreciate everybody that does that. Have a great rest of your Monday night, everybody. We'll see you all tomorrow.